Okay, welcome back. You're listening to the weekend edition of the Korelin Economics Report. Again, this entire program is originating from the San Francisco Hard Asset Investment Conference. Got an old friend with me right now, a regular guest on our program, Rick Ackerman. Rick, you made an interesting comment earlier today. You said, you remember when Mark Twain said, we were talking about the mining industry, and you said, Big Al, do you remember when Mark Twain said, basically a gold mine is a hole in the ground with a liar standing in front of it? Then you said, that's really not the case today. Now you got a hole in the ground or a hole in the side of the mountain or whatever, but you got somebody telling the truth standing outside of it. You want to elaborate on that?
Well, it's an interesting thing. It's true that it's no longer a liar standing over that hole. Here at the show, there are scores of exhibitors, and they've all got properties with assets in the ground that are worth a lot more than people are paying for their stocks. And you have to look at the whole mining sector right now is not so much undiscovered, but unwanted assets. And I think one of the reasons why the gold stocks have languished relative to the price of physical metal is that the demand for metal or futures is coming from other parts of the world where they'd rather not hassle with ADRs and buying gold priced in other currencies. But at some point, it's going to catch their fancy. The cheapest way to buy gold is to buy mining companies such as the ones represented at this show.
I agree 1,000%. It's funny, Rick, but I was having a conversation earlier today with some folks about the state of the market today, and obviously, one of the subtopics that came up was the state of the market in 2008, 2009. 2008, 2009 were actually just terrible, terrible years in the junior resource sector. What did I do? My wife and I bought as many mining stocks as we could possibly get our hands on that made sense to us, and as a result, 2010, when we sold out many of our positions, was one of the best years we've ever had financially. And I personally feel we're in the same situation right now.
Well, but you look at the stocks and you think, geez, one of these days they're not going to be a trade; they'll be a buy and hold. And looking at the longer-term technical charts of physical golds, the COMEX contracts, looks to me as though they could trade in a range 1,600 to 1,800, actually well into 2014, mainly because they enjoy a lot of buoyancy. There was an interesting piece out at Zero Hedge the other day that was quoting a Chinese minister as saying, considering the size of the Chinese economy and the exposure we have to other currencies, we'd rather be holding more gold. So at an official level, you have this hint that China is just a buyer, but of course not of mining stocks. They're buying gold futures essentially on the dips.
Well, what I think is really, really interesting, Rick, is the fact that China for a number of years has been amassing bullion. Okay, they're the largest producers in the world right now of gold. They may very well be the largest importer of gold right now. And, I've had a lot of experience in the business sector with people from China, whether it's Hong Kong, whether it's mainland China, whether it's Taiwan. My parents grew up in China. I was a director of a bank where I was the token Caucasian. Everybody else was, was old school Chinese. And I have to tell you, I have a lot of respect for their business acumen. I have a lot of respect for their concept of time. They're not buying gold because they're looking to make trinkets.
Absolutely. There's no real rush to buy gold. And I don't think the Chinese really have an obsession or a plan with putting the world on a Chinese currency standard. They're simply buying gold because they know it's good to own it. It's a representation of wealth that's going to be real no matter what happens to the economy around them.
I agree 1,000,000% on that one. Used to be 1,000%. Now it's 1,000,000% on that. Rick, in terms of mining companies, though, I want to get back to that discussion just briefly here, and that is, so you feel right now, as I do, that there is a really, really potentially great opportunity to invest in the junior sector right now. Is that right?
I just talked here at the show with a woman who represents a company called Orsa. And she showed me the numbers, really. We're talking about reserves up in the neighborhood of 2.8 million ounces. And the dilution is only, I think there are only 36 million shares circulating, fully diluted. So it's really a pretty good claim on some pretty good assets. And it's not like she's the only one at this show with a company that's got a lot of good things to sell. So, whether the world's paying any attention or not, there are so many good companies here with very cheap buys on gold that you really have to look out to the long term and see that there's going to be a day when they capture investors' fancy.
I agree 100% with you on that one. Now, getting back to, again, one of the inputs in terms of investing in the hard asset sector, for lack of better terms, you can't forget politics. You simply cannot forget politics. And you and I have discussed this many, many times on the show. But I'll tell you, I think the situation right now in our country, Rick, in terms of the stance that the administration is taking, the lack of compromise that it would appear is going on, et cetera, the fact that I'm firmly convinced that we're backing away from a true capitalistic free society. I think we're working more towards going in the direction. I shouldn't say we, because you and I aren't doing this, but I think a lot of the country is going in the direction really of being much more big government / socialistic type economy. Let's take care of everybody. Let's not worry about the fact that we don't have the money, because we can simply continue to print it. Serious investors aren't going to want to invest in an environment like that.
Well, everybody's nightmare is that Obama turns out to be another Roosevelt, and of course that holds certain implications for gold investing that are very negative. At this point, there's so many people out there collecting gold, hoarding gold, investing in it, that you think, well, it couldn't happen here, it couldn't happen again, where you wind up having to bury your gold in the backyard if you want to keep it as your own. But short of that, I think the investment climate will be good for gold. There'll be nothing as extreme as Roosevelt's confiscation of gold. But then again, there is going to be a bit of confiscation with what you might want to leave to your children and grandchildren. I thought that I heard something that's coming in negotiations involving the fiscal cliff that would push the inheritance tax up to, did I hear 55%?
Something like that.
That's pretty amazing.
No, it's huge. It is absolutely, totally negative for the economy.
And as someone pointed out on, I think it was Fox this morning, every penny of that inheritance, the estate that you leave that's taxed at 55%, has already been taxed 6 ways of sideways. And so it's not like this money left to your heirs hasn't been taxed enough, but to put an additional 55% levy on it. And I do think, even if Obama isn't a gold confiscating kind of guy, that he is a sort of confiscate everything that this quote-unquote rich have earned. And the thing that's so scary about that is his definition of rich comes in around $250K, which is really the meat, that's the heart of America's entrepreneurial energy. You're not taxing rich people at that income level. You're taxing people who are working 70-hour weeks and maybe not accumulating much.
I got to tell you, 55% inheritance tax is absolutely crazy. Now, getting down to politics, and we're going to be talking about that tomorrow night with a very interesting group of people led by Jeff Deist, Congressman Ron Paul's chief of staff. We're going to be talking about that. We're going to be shooting some video around there. I think it's going to be very, very interesting to see how that thing turns out. But I have to tell you, I maintain, and I have maintained for the last 7 years, ever since I started reading the president's books, et cetera, I think that he is firmly convinced that society needs to take care of everybody, and that is I'm getting excited here talking about this. I'm getting so angry, but that's the mandate for the federal government, is to basically take care of everybody and have those of us who work our tails off, for lack of better terms, pay for it. Now, I find that to be an incredibly large disincentive.
Did you see the Dinesh D'Souza film that was out a few months ago? He's a writer. He works for National Review, and it was about Obama, why he is the way he is politically speaking. It sort of takes you back to his roots in the third world. And as far as the redistribution part of his agenda, it's more than just sort of taxing Americans to redistribute to other Americans. He basically sees America as having a responsibility to redistribute to the world.
I think that's right. That's what I picked up from reading The Audacity of Hope. That's what I picked up from reading a book called Game Change that came out, a chronology of the of the '08 election. I have to tell you, if that's what the majority of the country wants, that's fine. But it's not what Al Korelin wants, and I don't think it's what Rick Ackerman wants. We are going to be back with you folks tomorrow. Edit. Okay, there it is. First hour of the weekend edition of the Korelin Economics Report. I'm Al Korelin. Appreciate you joining me. Stick around. We're going to be back right after the news break with the second hour originating here from the San Francisco Hard Asset Investment Conference.